Welcome to The Explainer. Today, we're going to learn a whole new language. No, not Spanish or French, but the language of the market. And it's spoken through these little colorful shapes you see on charts, called candlesticks. Trust me, once you learn to read them, you'll never look at a stock chart the same way again.
Think about it. What if a stock chart wasn't just some random, jagged line? What if it was actually a story? A story of a battle fought every single day, or even every minute, between buyers and sellers, between fear and greed. Well, it is. You just have to know the language.
And, like any language, you've got to start with the alphabet. For us, the most basic letter, the absolute building block of everything, is a single candlestick. If you can understand this, you can understand the rest.
So what exactly is this candlestick? Well, think of it as a super efficient snapshot. For any time period you choose, a day, an hour, whatever, it packs in 4 crucial pieces of data: where the price opened, where it closed, the highest point it reached, and the lowest point it hit. It's like the complete box score for that period's game.
Okay, so let's break it down. That thick, colored part, that's the body. It tells you where the price opened and closed. But the real drama, the gossip, is in those thin lines sticking out. We call them wicks or shadows. They show you the full extent of the battle. So, a long upper wick tells you a story. Buyers tried to shove the price way up, but the sellers fought back and pushed it down before the end. See? It's a whole little drama in one shape.
And the color? Well, that tells you who won the round. If the candle's green, we call that bullish. It means the price closed higher than where it started. The buyers are in control. If it's red, it's bearish. The price closed lower, meaning the sellers won that round. Pretty simple, right?
All right, so we've got our letters down. Now let's start making some words. We're going to start with the good news. Patterns that suggest the buyers, or as traders call them, the bulls, are starting to take charge.
And a really key idea here is what's called a bullish reversal. This is what you look for after a stock has been dropping for a while. These patterns are like a little flare going up, a signal that the whole trend might be about to turn around and start heading up.
So here's a classic example, the bullish engulfing pattern. It's a 2-candle story. First, you get a red candle. The downtrend is continuing, sellers are feeling pretty good, but then, bam! The next candle, the buyers come in with so much force that the new green candle completely swallows or engulfs the entire red candle from before. It's just a huge, dramatic shift in power. You can really see it here. The sellers had their moment with that red candle, but then this absolute wave of buying just comes in and wipes them out. It's not just a little win for the buyers, it's a total domination of the previous day's action. That kind of move gets your attention.
Now for a more subtle story. This one's called the Morning Star. And it's a great name, because it often signals a bit of hope after a dark period of falling prices. It's a 3-candle pattern. It starts with a big, scary red candle. Sellers are in control. Then you get this tiny little candle in the middle, and it finishes with a strong, confident green candle.
So what's the story here? Well, the bears, the sellers, were in total control. But then they hesitated. That little candle in the middle shows a moment of indecision. The selling pressure just dried up. And in that pause, the bulls saw their opening and came roaring back. It's like the sun rising after a long night.
But of course, it's not always good news. For every bull, there's a bear waiting around the corner. So now let's flip the script and look at the patterns that tell us the sellers, the bears, are about to wrestle back control.
And the cool part is, a lot of these patterns are just mirror images of each other. So once you learn one, you kind of get its opposite for free. Check this out. On the left, our bullish engulfing pattern. And on the right, its evil twin, the bearish engulfing. It's the exact same idea, just in reverse.
So here, the context is key. This pattern shows up after prices have been rising. Buyers have a nice green day, but then the sellers show up and deliver a knockout punch, a massive red candle that completely swallows the previous green one. It's a sign that the party might be over.
And it's the same deal with our 3-candle pattern. The morning star brings the hope of dawn, while its counterpart, the evening star, signals that night might be falling on that nice uptrend. They're just perfect, symmetrical opposites.
And the story is exactly what you'd expect. The bulls were pushing prices up, feeling confident. Then you see that small candle of hesitation right at the top. The momentum stalls out, and that's the opening the bears were waiting for. They jump in with a powerful red candle, confirming the tide has turned.
Okay, so we've seen the bulls win, we've seen the bears win, but what happens when neither side can get the upper hand? Sometimes the market just gets stuck in a perfect deadlock, a moment of pure indecision. And yup, There are candles for that too.
Meet the doji. It kind of looks like a plus sign or a cross, and for a very simple reason. The price opened and closed at almost the exact same level. Imagine a whole day of fighting. The price goes up, the price goes down. But when the bell rings, they're right back where they started. It's a perfect tie.
So, when you see a doji, what should you be thinking? Think of it like a yellow traffic light. It's a signal that whatever trend was happening, up or down, is losing steam. The market is taking a breather. Buyers and sellers are at a stalemate. The key thing here is to just wait. The next candle after the doji is usually the one that tells you who's going to win this tug of war.
Okay, so we've learned the alphabet, we've learned a few key words and phrases. Now, how do we actually sit down and read the book? Let's put it all together with a super simple framework. Honestly, it just comes down to these 3 steps. 1. What was happening before the pattern showed up? Context is everything. Was the price rising or falling? 2. Spot the pattern. Is it a bullish engulfing, an evening star? And 3, and this is probably the most important part, look for confirmation. Never ever act on a pattern alone. Wait to see if the next candle agrees with the story.
And that leads to the biggest rule of all. If you remember one thing, make it this. These patterns are clues, not crystal balls. They're telling you a story about what buyers and sellers are thinking and feeling. They are about probabilities, not guarantees.
At the end of the day, the real power of reading candlesticks isn't about perfectly predicting the future. It's about getting a much, much clearer picture of what's happening right now. Who has the momentum? Who's hesitating? It's about being able to read the room.
So, we've given you the basic alphabet and some of the grammar of this language. The next move is yours. Pull up a chart, any chart at all, and just look. Now that you know what you're looking for, what stories of battle, of hesitation, and of victory can you find?